Good evening, Ken at Tortoise Capital. This is the nightly podcast for September 17th, 2020. We had some technical problems at GoToWebinar, so I'm recording this separately and posting on Patreon. Thanks for your patience. Quick look at what happened today. All right, so we had, as we warned about yesterday, experienced a nice big gap down from here to here. There was a intraday follow through and then sold off halfway back down the stack. We're still below the dragon. We're within spitting distance of the 10-day low and the 30-day low here at 331. So this was a vote of no confidence today. On the positive side, it is dramatically oversold on a 10-day basis, so that makes this, if we look at this as like a Williams %R, this is all oversold conditions here. And the last time it was down here, it made about a 3.5% gain to the top. It has now sold back. So there is some opportunity as the upside, but the failure to follow through is problematic. Let's look at the downside first. The RL10 peaked at the bottom here and turned from fall into winter right here, so this is really negative. Across the baby dragon turned to negative. So anything that rejects here at the belly of the RL10 is an auto short. So this is actually a pocket short opportunity inside here. And then if it breaks that one, that should be a second position short. You could even get a third position short if it breaks through this combination of the 10-day low and the 30-day low. Then the targets would be Z2, the peak, RL270 fair value previously. This would be the 10% sell-off, and that's when the real correction occurs. That would be 4 positions short. And then you have the Z3. To the upside, it has to get through the skin of the dragon and the RL10 price at 336. The high of the day at 337.7. Spine of the dragon, combination of the top skin of the dragon plus the Bollinger Band mean at 340. From there, I would probably say this peak here, which is the RL30 extension. We're going to have then we have the PSAR +1 right there. We have the Z1 at 346. Then the peak of the dragon at 350. Z2, peak of the RL10, Z3, and the 30-day high. So you notice that the 30-day high was made here. Now there's this gap between the 10-day high and the 30-day high. The 10-day range is still 7%, and then the 30-day range is about 7 3/4. So this is not looking promising for the upside. The downside is looking serious biz, and there's about a 3% buffer between current price and the all-important 10% sell-off, so that's about 3%. All right, taking a look at the sectors. Let's see, we had the S&P was down 0.88. the Russell 0.73, Diamonds 0.5, and then Treasuries at plus 0.3. So Treasuries now over 164. They've got to get through 170 to really be a decisive move. The sectors that were better than the S&P was healthcare and emerging markets, down a fraction. Silver was flat. Oil, exploration, energy, and Japan all around that 0.15 range. Materials gave another strong day today, 0.74. Brazil, 0.81. And then oil, 1.85. Now, the companies that were better, reading from bottom to top, Twitter and Home Depot didn't lose as much, but they still got beat. Minus 0.4 in NVIDIA and Wins, Cisco and Intel, traditional tech at minus 0.1. Boeing slightly in the green, Walmart 0.32, Nikola strong intraday 1.65, CAT, and then some more of the our materials, our metals guys. There's DuPont, Nucor, Cliff Natural Resources, and U.S. Steel, and our perennial favorite, Devon Energy at 1.95. To the downside, again, the market down minus 0.8. Finance suffered minus 1. Mexico minus 1.2. Virgin Galactic 1.3. Consumer discretionary 1.4. Wheaton Precious minus 1.5. The FANGs minus 2. Clean Energy and Bill Ackman minus 2.25. And then the triple techs got smashed with triple Qs, much worse than the broad sector. And then individual companies, even Goldman couldn't hang today. Simon Property Group, Alcoa, Facebook, Tesla. That's really troublesome for the true believers. Take a quick look at some trades. So as we've been saying, this is a market that favors the intraday trading, and smoke them when you got them. Cash them when you can, make bank, and carry no risk overnight. So this is Tesla. Nice trade today. Here's where it closed. Had a big gap down to the low of the day as of that moment. About 15 minutes in, we had so there's the winter. There's the VWAP. And winter becomes spring, supported spring crossing, exactly according to the rules. If you use the PSAR flip, then you have about a $10 initial risk. I use a $5 risk right below the VWAP, and then treated it like a modified Wu Wei exit. Either one of these is fine. It's just you get twice the position size if you're using this tighter stop. And on $5, that's a little over 1%. I just felt like that was safe. It had failed to fail this entire piece and was above the VWAP and moving out and looking to close the gap. So I played the tighter stop with the double position size. It moved out smartly. I used this as the Wu Wei exit, and then when this goes 1, 2, 3 on the fourth one, move that sniper stop to the PSAR, and then with half the position I wait for the Bollinger Band mean to pick up, and then there's my manager exit, and then the sniper exit committed to was just taking half the position here when it touches the PSAR. So nice trade. That's probably about 3 execution hours Wu Wei exit stop. This one is Intel. So we had projected tech to be a big winner. Does this look exactly? Yes, it does. Big gap down, morning hook, winter becomes spring, supported spring crossing, a stop right here, and so that is a risk of $49.65 to $49.30, so about 35 cents. Call it 40 cents. So that would equate to 1,000 shares of Intel. Spring becomes summer, fall becomes summer, and this is a standard Wu Wei exit. On 1, 2, 3 on the fourth one, move the stop to the PSAR. The sniper picks up the PSAR exits, only gives back that little fraction. The manager exit picks up the Bollinger Band mean and exits here. So that's about one full execution R, and then a supported spring crossing again on the re-entry. This is a tighter stop. This is about 20 cents. So you could have as much as 2,000 shares in that one if you're trading $400 at risk. And again, standard Wu Wei, 3 bars or 3 dots above, sniper, half the position, and then half the position with the manager, and then that's going to just work really nicely. This is the picture, the stylized picture, the icon of that Wu Wei exit, where you have the entry, keep it in place until you can lock in no lose plus dinner for 2, half the position on the Bollinger Band mean, half the position on the PSAR, just routine. This one is Devon Energy, big gap down, morning hook, supported spring crossing, PSAR flip, Wu Wei exit, half the position with the sniper, half the position with the manager, and that is about 1, 2, 3, 4, 5 execution arc. Here was the logical place to add a position if you were going to, when it powered through the gap and above yesterday's VWAP. So this would be the place to do it. I didn't, but that's 5 execution arc. And so let me go back. This was the end of trade number 1. Let's take a look at that one again. Yep. End of trade number 1 here at about 10:30. So that's the exit. This picks up the trade at about 10:30 right here. So that's the exit from that previous trade. Sells off in the winter, becomes spring, supported spring crossing. PSAR flip is the initial risk. Now that's only about 5 cents. I gave back way too much on this, even taking the sniper exit. If I'd have been quicker on the draw, maybe here. Does not fail further. Supported fall crossing now because summer became fall and then it crossed. So here, stop here. I take the sniper exit on all of it because I was concerned about getting smacked again. So this one is a micro payoff. This one pays off about 2 execution R. Devon Energy. So this is the lunchtime trade. Sells off winter. Finds support at the VWAP like it's supposed to. Supported spring crossing. Now this is only like 5 cents to the PSAR flip, so I went ahead and used the bottom of the VWAP. Sniper exit, re-entry, complete position exit on the PSAR dots. Re-entry on the summer breakout. I used again a 5 cent stop here, and that was moving well. And it was right about in here. I'd be looking to move the stop from here up to lock in the gains. U.S. Steel, the entire material sector was doing well. Gap down, supported spring, Bollinger Band exit. That's like 1, 2, 3, 4 execution Rs. This one's 2 on the re-entry. That's 1. That's a scratch. This is 1, 2, 3 more. And just playing the rules, supported dragon crossing with the PSAR and then using the Bollinger Band mean as the exit. So that's about, 6 or 7 execution Rs. Just saying. Daily report. We've covered this. We're now dramatically oversold in all dimensions. Still bullish normal. We've given back some serious gains. We're at that about an 8% sell-off right now. Risk Z poised to collapse. We're down here in the heavily oversold. The Qs are channeling. These are all getting close. Notice the tech giants got smashed today. Buy and dip opportunity? Maybe. Start intraday first. Handful of dojis, lots of channelings, many auto framers testing out well, so you can be judicious. It was the materials today: CAT, DuPont, 3M. Only a handful of dojis. Still plenty of good auto framers. Oil and materials. Even Brazil had a nice little run. Metals and mining. Lots of auto framers and some great symbols just in the first, the top 5. That's your home run derby right there. Energy, Coke, and Treasury still on there. Gold, Walmart, and Citibank on the pop. Just wanted to show the rest of the ones that are in the stack, but which don't meet the 2-to-1 criteria. Being dominated now by winter and fall. Brazil was an interesting anomaly today, and there's still a little residual strength in McDonald's, Disney, and Caterpillar on the basis of their Z-scores. But not much to choose from. Lots of worry and concerns, but this upper right-hand corner, that's where if you're looking to get short, these are things that are suffering. And some big downward moves today, like consumer discretionary and the S&P itself at minus 57. Ouch. And that's everything I want to cover. This is a market condition trade frame right now, with the market poised only a couple percent above that 10-day low, and plenty of reasons to believe in a correction. Wouldn't take much to spook this market. Look at that, just failure to follow through, and the parabolic crossed over the straight line regression line here, so that, the end of that run. Alrighty, that's everything I got. We'll get this published and posted. Thanks for your kind attention.